let's announce it. It was good, man. It was good. It was chilling. I was just relaxing, you know. Same old, same old. How was yours? I used to hate weekends. Now I'm loving it. It really like I really need, especially like this past week. I was so exhausted from the markets, especially on Wednesday when I had the live stream, the whole New York session. It was very, very, very draining. So I used the weekend to recharge, basically. And here we are. Just got back from South Carolina. Nice. Were you just there for a vacation or something, or it was a business trip? Let me announce the stream real quick, and then let's start. And the screen, obviously, I forgot the screen. Okay. Finished my price action journal for May. Published it in the Discord. It's a big one. Is it in the general chat? Oh yeah, I saw it. I'll take a look at it and after the stream. Looking forward to see what you unleashed. All right. Want to go visit a friend who isn't doing too well. Oh, that's sad, man. That's upsetting. Is he at around our age or? I feel like I feel like younger adults are having more health problems lately, especially like after the shots, the COVID vaccine. I don't know. Yeah, I might be bullshitting about it, but that's how I feel, honestly. No, that's terrible, man. I wish him the best, seriously. My prayers will be with him tonight. That's really upsetting. All right, let's start. Do you guys see the screen and the voice is fine, I assume? Let me get a. You don't see? No? No for voice? No, no for screen? Oh, pause, stream pause, it says, yeah. Okay, let me just rearrange that. Discord is a bit laggy for me right now for some reason. How about now? Just give me a thumbs up when you guys have the screen so I can start. Good, good, good. Alright, lost. Let me get another check from you so I can start. Good, perfect. Alright, let's take a look at it. So, we had a very eventful Friday, as you guys know. It was the monthly close. We had a very, very deep moves in both directions. So, what I'm looking right now is the weekly chart on indices. Um, So here, the weekly fair value gap, we're still above the CE on Nasdaq, and here same deal. And yes, actually touched the IFED fair value gap. So I still don't have enough data from the weekly though. It's that just it set the high last week with last week's close, then we had a low. Right now it established a dealing range, so we can work within that dealing range on the higher time frame purposes here. Never tested the range EQ, which makes me thinking I think we could still see a little bit of down move early in the week or early in the month rather. Um, but that move should get easily faded in my opinion, and we should target the buy side at some point, just off of the weekly chart. So let me clean that. Let's go down to daily, which is what's everything is unraveling. So on the daily, I have my interest on the daily rather than the weekly right now. What we are looking at here is, so here's the dealing range for the weekly, right? So we have the S&T divergence at these lows with YM though. So ES did not tag the low. So it's the divergence is not between ES and Nasdaq, it's between YM. So using that dealing range, here's what I was thinking, and I'm still thinking about the same thing, honestly. We have this dealing range, right? Neither of the assets touch that level, right? And then we have different lows at the range EQ. So for example, ES has this low, right? And then NASDAQ has this low from May '08. Now, looking at the range EQ or where range EQ lies down, I'm thinking about like one more push down, right? And for divergence here, something like this, then run the high. That's what I'm thinking. However, as you guys can see, ES really closed very strong on Friday. Now there's a rejection block there, so this idea might not be valid. But if we get a bearish order flow early in the week, early in the month, I think this is going to be the scenario where Nasdaq, I guess at this point, Nasdaq will form that divergence, will turtle soup the low. It seems like. I might be wrong about this though. I'm not relying on this. This is just if market keeps going lower kind of scenario, if that makes sense. So, and YM on the other hand is very bearish looking. So let's go down to, I'm going to keep this low actually here, just to see where it lays down on the lower time frames. Same thing, let me keep that as well. All right, let's go down to 4 hour. Let's see what's going on there. You see on the 4 hour, it looks like the sell model low is kind of there as well. There's no divergence there though. If there was some sort of divergence on the 4 hourly, I would be like, yeah, we're looking at that low, but right now, not so sure. So there's a gap right now, gapped up. So Nasdaq gapped up. There's also a rejection block from Friday. I mean, the rejection block is basically like, it makes me thinking bullish, honestly, because it's a rejection at the end of the day, right? It's pretty self-explanatory. And engulf the down close candle, which means now we have an order block which should really hold the price. So here's the OB. Let's annotate the OB. What the fuck is going on? So that's the OB. This is the rejection block. ES is very strong. I think the the highest probability to draw on liquidity for Nasdaq should be the 4 hourly high first. This high. It should be drawn into that high first. And then depends on how it reacts off of that high. We can say, yeah, it wants to go for the buy side right away, or it's gonna be going for the lows, or etc. You know. I also have a bullish S&T on the H4. Really? Oh, you mean the bigger one, like this one? I would have I would have liked that if the low, so this low was on the daily chart rather, because you know the 4 hourly S&T dive. This is not really a 4 hourly divergence, honestly. The divergence on this time frame should look something like, let me see an example. Like for example here, these highs, right? That would be a 4 hourly divergence, but these are like not close proximity, so I would say that is a daily or a higher time frame divergence. But the problem is there is, oh, actually that's a low. Hold on. I would say that's, yeah, I would say that's a daily divergence, honestly, instead of the 4 hourly here. So again, if that's the case, which it looks like it is because there's a rejection, we're looking for the daily buy side, obviously. And another clue is, so there's also this daily sell side, right? It was taken out and the candle closed above it. So that's another clue in my opinion about bullishness. But let me go on the 4 hour real quick again. So here's one thing to note here on the 4 hourly. So I'm looking at the highs. So yeah, I'm looking at the highs and I'm not seeing any bearish divergence. Like there's literally none. The only thing I see is, let me clean it a little bit. The only thing I see is, so initially there was this 3 drives at the highs and it broke down, right? Same deal on ES, 3 drives and broke down. No divergence. Which makes me thinking like we could potentially see one more push down. But ES, again, ES is very strong. Nasdaq is also very strong. It's just formed an OB. But again, okay, here's what I'm going to say. If Nasdaq takes out the H4 high, I think will be bullish for sure. If it doesn't take it out and keeps below it, that will be a divergence which could potentially send the price into range EQ. Okay, now it's complete. Now it makes sense. We also have a SIBI. The SIBI, I think the SIBI is not high probability though. That's one you're talking about. I think that's not high probability just because of the rejection block. I think it really should knock that SIBI out and form perhaps a trap. Because I'm really liking the rejection block. But again, we gotta go step by step. Unless Nasdaq catches up with ES and tags the high, it could have potential to go for the sell side. But if it goes above it, I think we're looking for the short-term buy side. Alright, let's go down to 1 hour and see what's going on the hourly. On the hourly, I'm looking at the highs again to see maybe like if it could form hold on, this is not a divergence. I'm looking at divergences here. Oh, okay. Okay, this looks even better. There is this divergence on the hourly, okay? Which ES, wait, hold on, ES take that out? Or, oh, ES already took it out, actually. I was gonna say that should be the target. So, okay, here's the deal. Let's clean that up. Unless, here's the deal, unless Nasdaq takes that high out, which it should really, we could see more downside. Okay, that should be the target because right now what we're seeing is, I'm going to zoom into Nasdaq, we have a V-shape rejection, right? So this is also called sharp turn pattern or reversal, whatever you call it. And in these scenarios, what usually happens is, because it's a V-shape, because it's a sharp reversal, it usually forms one more manipulation within the most current fair value gap, which is what we are trading into right now. So that being said, I think this is initiating a buy model, the target being 787, target for the hourly buy model. Okay, but in these scenarios, when there's a V shape, we need to see one more manipulation, and that manipulation will look something like this. So V shape, right? It doesn't necessarily have to take out the internal range high. It accumulates here a little bit, runs the low, and then goes for the buy side. Okay, and this rally towards downside within the fair value gap or above it, it causes the divergence, the very first divergence after the V shape. Okay, that divergence is usually the turtle soup. Okay, this is what I want to see. S&T divergence within this fair value gap, or even perhaps in the BPR. Okay, that divergence sends the price to 787. That's the thing what I want to see on the hourly basis. So this is on the hourly though, meaning you gotta have the divergence on this specific time frame. Okay, not on the 5, not on the 1, but on the 1 hour chart, okay? Because it seems though as though um, the buy model is here on the hourly, if that makes sense. This looks pretty good here. And I think because Nasdaq is quote unquote weaker pair comparing to ES, the chances of Nasdaq running low comparing to ES will higher is higher. All right. You can also narrow it down to the BPR, but I'm taking it from the fair value gap basically. See if we can get that. I like the hourly. So my main framework will be the hourly, and once the SMT occurs or forms, that is going to be the low of my dealing range, and then I'll be looking at this framework specifically. Wherever the divergence happens, maybe it could have happened at the CE, I don't know that. But once that happens, then we can look for the dealing range, not before. All right, let's go down to, oh, actually. Let's take a screenshot of this. Let's go down to the lower time frame. Okay. This looks like the same deal. V shape, no divergence. Divergence is basically a manipulation, okay? So the importance of divergence is when it happens, you know that it's manipulation. The manipulation is completed. Now the market shouldn't manipulate further, okay? That's the importance of the divergence. And because there's no divergence as of now on this time frame as well, and it looks like a V shape too, I am favoring the same deal as the hourly time frame. V shape, diverge somewhere here, and rally. And the first rally will be above the buy sign here on this time frame. But also the highest probability draw on liquidity should be the S&T highs, which is these highs, this high here on the 15-minute. And the dealing range will be the same deal. Once the S&T forms, you look at the S&T low all the way to this high here, and that will be the dealing range. Before that, there's no way to anticipate where the low will be, so I'm not assuming anything, or I'm not saying it is going to be here or there or whatever. It could be anywhere, honestly, so be aware of that. I would say don't long it until it diverges, simply put. But I think Nasdaq will catch up with ES. Now let's go for the 5-minute. 5-minute was eventful on Friday. So this is what I'm talking about. Now you can see that on the 5-minute, okay? I'm going to zoom into Nasdaq. So this is how I anticipated what I anticipated on Friday, okay? It's the same deal. Price took the CPI low, then it kept going lower and lower, lower, right? And at some point, it formed this V-shape, sharp reversal, right? Once there is a sharp reversal or sharp rejection or whatever you call a V-shape, now you got to have an SMT divergence at some point. Okay, now I pull the ES. There is the SMT right about here. Okay, and that sends the price. Simply put. Okay, and now what we're seeing is literally the same deal on the hourly and on the 15-minute. Now you got to see those the divergences on those time frames specifically. So this ended up being 3 drives though, and the buy side was there, was taken out. Now it's reaching for the other one, if that makes sense. I hope this like V-shape, the thing I'm talking about is pretty clear. If you guys have any questions about it, just let me know. This is a type of smart money reversal basically, but it's a very sharp, very fast form of reversal, which always ends up manipulating before making the run. So that's that. Now what we can do is, by looking on the 5 minutes, we can anticipate where it could go potentially. Now on the ES side, there is there's actually an SMT divergence at the highs. So here, there's a divergence on the 5-minute. By looking at that divergence, I think we can assume a dealing range now on the 5-minute, and we can assume where it could go or pull back into, right? And I'm looking at this fair value gap specifically. Now let's look at how that aligns with the higher time frame. So potentially I want to see the divergence somewhere here. Let's go on the 15-minute first. IFED fair value gap on the 15, also BPR, and on the 1 hour, same deal, BPR. It looks like BPR CE. Let's see, yeah, BPR CE specifically. That looks good, I like it. So diverge somewhere here would be good. Does it make sense, or am I bullshitting? Or confusing? Sounds confusing. Here. These will be, this is the short-term buy side. This could be another potential target. This is the 15-minute high. The upper one is the 15-minute high, but ultimately this should be the buy model completion, 787. Let's annotate that with a horizontal ray. And depends on how it reaches to 787. I think we will have a better read about whether it wants to go higher or seek some buy side afterwards. So that's the market maker buy model objective. This is short-term ESL, and this one is the 15-minute high, or the hourly high, let's say. Hourly internal, let's put it that way. So it should go step by step. So first things first, what I want to see is, so because it's the live market at the moment, because there's a divergence at the highs right now, I want to see that divergence sending price towards the short-term sell side first, so it could complete its objective, or low-hanging fruit objective rather, right about there. So let's take a screenshot of this too. What are you guys thinking? I want to hear from you guys too. What do you guys have in mind? So this week is the first week of the month, meaning it's usually eventful. Let me pull up Forex Factory. So, come on. So what we have this week is Monday, 9:45, 10 a.m., a red folder. Tuesday, 10 a.m., red folder. Both days will be, in my opinion, high probability and several bullet focus. Then on Wednesday, there is, hold on, I swear I saw FOMC. Is it next week? Okay, it's next week. So on Wednesday, again, 10 a.m. and 8:15, a red folder, red folder. So every day is basically red folder day. You guys could potentially trade every day this week. And Friday is NFP. You know, people see it as a low probability day. I don't see it that way. And I still, up to this day, don't know why ICT is so afraid of NFP. I think it's just a regular red folder day. Or acts like the same way, honestly. But primarily until Wednesday, it'll be silver bullet focused. As you can see, it's 10 a.m., 10 a.m., 10 a.m., and Thursday, Friday, 8:30. And it's going to be the same deal. So what's going to happen is, if market rallies with 8:30 and forms an SMT divergence before New York Open, just target the 8:30 low. And if it does the other one, like the opposite, if it goes for the sell side and forms a bullish divergence, just trade the 8:30 high, simply put. I mean, long it to 8:30 high. So, yeah. NFP week 2, every day is red folder. Yep, every day is red folder. It looks. Oh, I forgot to change the screen, right? Nah, never mind. Stream paused again. Why is it pausing? Fucking Discord, man. Is it back? Okay, I think it's back. Is it back, guys? Can you guys see the stream? I don't know. Discord is doing some bullshit stuff, like pausing the stream without my knowledge and authorization. All right. So also the gap. Let me measure the gap real quick. So this is the close open. 20 points. You guys should keep NY on the charts as well. So far, because divergence, I'm expecting a pullback here over the overnight session. During overnight session, it's using, as you guys can see right now, it's using or trading below the gap. So I'm favoring it stays below it for now. Goes for the range EQ and sends it from there. That'll be healthy. Don't trade it though. Enjoy your Sunday instead. And the S&P is on the 5, so you don't have to go on the 15. Let's take a screenshot of this. Any failure going above the highs though, that means we're looking for one more sweep of the sell side or the daily range EQ. But I'm favoring, so here I'm favoring the hourly buy model completing. 787 should be the target right now, or higher. If it keeps up the pace from there, it goes higher. So that being said, I think that's it for the indices. Let me go on the 1 minute. This was a very beautiful run, man. So on Friday, since I'm looking at the 1 minute chart, the only thing I did that was a mistake was, so I was looking at this high here for buy model target, and I was like, hold on a second, that's not the S&T divergence. There's no S&T there. Initially, I thought this was the S&T divergence. Then I zoomed out a little bit. I was talking to JGM in the general chat, and he asked me, where's the S&T? I said, oh shit, you're right, there's no S&T. Then I looked at it again. I saw the S&T was here. So this was the only divergence, the bearish divergence in this whole leg. And I'm like, okay, this is a buy model, and it should tag that high. That should be the drawn liquidity for the buy market maker buy model, and tagged it literally at 355. Very, very good rally. And this was the one set out for life. S&T divergence there. Second leg, meaning it's the second stage reaccumulation, made the rally. Basically, it was clean as fuck. So this was the S&T initiating for the first leg. Expansion, right? The first leg is complete. Now there was a divergence here. Now you can assume or anticipate a pullback into range EQ of the first leg. Came down, second stage. It was pretty algorithmic and beautiful. But yeah, so yeah, that's that, guys. Let me go to the other assets real quick. Crude oil, disappointing assets. I wanted to see buy model or trap formation here. Failed to break out of the fair value gap on the daily and going for the lows. I think this is definitely in the sell model. It'll keep going for the lows basically. So here's the first target, but I think it's going to go for the external. I think we're looking drawn liquidity for crude 66.19 should be the drawn liquidity. I don't think it's going to stop here, honestly. Disappointing crude. Very disappointing. Now, it needs to expand here, form a fair value gap, then go for the sell side, basically. Pretty simple way. I don't even need to go on the lower time frames on crude, honestly. Let's go to gold. I don't know if you guys trade gold and stuff, but let's take a look at it. I'm gonna put silver along with it. I'm gonna keep it real quick on these assets. So there's a daily divergence on the commodities right now. Actually, this could be the weekly. No, it's not the weekly. So here the divergence is there. It should at least go for the sell side, the short-term sell side, but overall what we're looking at is the divergence low, which is here. So I think that'll be the target for gold. This is the dealing range. Once it breaks the dealing range, I think it'll expand for the sell side objective. And the price is 2,194. So you can look at this too. It's almost at range EQ. But the beautiful thing is, like, this was the second leg, right? And it literally bounced off of the range EQ here and targeted the short-term buy side. Now the other assets failed. No, because of that, there is a divergence right now. You can look for more sell side targets. Let's do this. I'm gonna take a screenshot real quick. All right. Now let's do the same thing. Oh, okay. And let's jump to the DXY. Not leap. Fuck you, leap. Alright, DXY, change the layout. Gotta change the layout. Alright, DXY. It's so laggy right now. Come on, guys. It's not even Monday. The market is not even open. Why is it so laggy? Alright, DXY. I'm still bearish on DXY. Like, nothing has changed. It's just accumulating within the daily fair value gap. But overall, I think it should break the range EQ. And this places below the range EQ, forms the sell model, completes the sell model, and the completion will be the chop short. Still the same deal. I'm looking for a lower pricing on DXY, which should mean the forex currencies and the indices should be really delivering buy side with this. But we'll see. Still looking the same though from last week's. So these are last week's annotations, and nothing has changed really. I'm going to take a screenshot of this. Let's put this chop here. Alright, I'm going to switch to Euro USD and GU. Take a look at the GU as well. On the daily. Yeah, so these are keeping its bullish order flow basically. Same deal as DXY, nothing has changed since last week. Now it formed a new SMT divergence, which should be the second stage now. So here, what you guys can do is, so here, hold on 1 second. It's the same deal. Initially, it formed a divergence, right? On the bearish side, at the highest. Here's a divergence on the daily. So once it's there, now you look at the dealing range from the S&T low to high. Now you can expect price returning to range EQ. Now in this case, it didn't do it, but it's what it is. I guess that happens in forex currencies. And it formed a new dealing range. It could be this actually, but that's another topic. That's what I'm backtesting. So basically on stronger pairs, I'm looking at the higher low for dealing range, but the backtesting session for that is not completed yet. I need more data before I start talking about it. Here's the divergence. Now it should be in the second stage reaccumulation. So the obviously the highest probability target should be the short-term buy side, and then it should keep up the pace and go for the original consolidation. Now it should expand really fast. I'm talking about like maybe 5-day green candles or more. Nothing has changed though on the forex side. Cool. All right, ECP expected rate cut this week. Interesting. Rate cut. That should be bullish for the market. Speaking of which, I'm eyeing AMD to get longs or call options. So last week, it formed a weekly trap. So initially it came down to discount volume imbalance, never violated it, accumulated there for 1 month, then flipped the last SIBI. Now it formed a trap there, and so far it's respecting that trap. This is literally at the range EQ, so I'm expecting a bullish delivery on AMD, and this should be, let me see, not sure if it will be the second. I think it's forming a new buy model because it completed the second stage accumulation. I'm just expecting AMD catching up with Nvidia basically, but the thing is, because there are a lot of like gaps and stuff, this doesn't necessarily have to go for the external high. So in my opinion, you got to trade this step by step, and I think the short-term buy side on the weekly chart should be the highest probability target, drawn liquidity. But once it gets there, if you decide to trade AMD call options or AMD shares, that would be a great level to take partials and stop loss at break even. And that is, if you buy it today, a 12% return, not bad at all. But I'm favoring external high. But this could be step by step. Like it goes from here, retraces, goes one more time. Like, I kind of like that, you know. Maybe like 3 drives into external, or 2 highs and the third high will pop. Something like that is what I'm expecting. So it requires a lot of time, a lot of patience, because this is essentially a swing trade. But so far it's looking good on the lower time frame. Even let me go on the 4-hour. Got to turn on the. I always forget this. How do I open the after hours pre-market? Oh, here. So here, let's see. Wait, let me go to daily actually. No, 4-hour looks better. No trap. This fair value gap was inverted. There's a 3 drive here. Should be the. So yeah, it came to range EQ and pumping from there. Yeah, I'm liking this. I'm liking the AMD. It's like you can literally see this sell side of the curve, buy side of the curve, and this accumulation is the reversal. Now we can't look at divergences in stocks, but structurally it's the same deal. This literally is in the Nasdaq chart on the 1 minute from Friday. Reversal, 5-minute 3 drive, second stage reaccumulation. Needs to keep going higher. So yeah, I'm gonna keep this as well. Not for Euro. The XY should rally hard if they cut. It should. Yes, the rate cuts are bullish, but it doesn't look like it is bullish on the XY. I mean, the XY doesn't look really bullish. Come on, where is it? So, is ECB the cut rate? Do you know which day is it? The announcement or the decision? I mean, just so here's the thing. This is what I said last week as well when I was looking on at DXY. So far, because it's in consolidation on the higher time frame, so on the daily, I'm not getting a lot of good read directionally from DXY, right? So what I'm doing is, so here it's literally stuck in between range EQ and the daily CIBI. So what I'm doing is I'm looking at the forex currencies like Euro and GU because they're bullish. I'm thinking like, okay, this accumulation on DXY should end up at the sell side because the forex currencies are a bit bullish. That's my thought process basically. But just looking DXY chart or just analyzing the DXY chart, I can't really say it's bearish or bullish at the moment. So for me to be bearish on the DXY, it needs to displace below range EQ from here. Then I'll be like, oh, okay, we're definitely looking for sell side delivery. Or if it flips the highs one more time, then I'll be like, yeah, we're definitely looking for um, bullish delivery towards the buy sides. But that's what I'm saying, I'm favoring sell side, even though the price action is not there just yet. But yeah, I guess that's it for today, guys. Unless you guys have anything else to say or want me to look at anything else or anything, something like that, still let me know before I wrap it up. Why TradingView is so laggy? It is Sunday, for God's sake. Let me go on the 5, see what's going on here. Yeah, this should be the throwing liquidity right now. And the dealing range is here. Discount fair value gap. If it goes for the discount fair value gap on the 5, or if New York opens somewhere here, that would be so good because that means we're not going to be having Judas swing on Monday, or there'll be Judas, but perhaps it's not going to be a large range. Anyways, like either way, I'm very excited for this upcoming week. It's a fresh start. June, summer is here. We're entering the Q3. Very exciting. Did I feel the earthquake? Where was it? No, I didn't feel it. In SoCal? Let me see. Pasadena? No, man, I didn't hear. Hold on, let me see. LA. 3.5 in Pasadena. No, I absolutely didn't feel it. Are you also from SoCal? I think it's because like in terms like the magnitude is not that big, first of all, and secondly, Pasadena is like I think it's like 35 miles away from me. Oh, you're from Pasadena, bro. I love Pasadena, especially South Pasadena. Pretty cool, pretty chill neighborhood. I just love the vibes over there. So, anyways, guys, if you don't have any questions or any comments or anything, I'm gonna wrap it up here. And I'm gonna start uploading the video shortly. Alright, I guess no one has questions, comments.